All right, so let's get to that other music streaming service. We're talking about Spotify following a third quarter earnings miss. The shares are still down about 1.3% today. Our Alexander Canal taking a deeper dive into what's next for Spotify. So, Allie, what are we looking at here?
So to really understand what's going on with Spotify, you have to go back to the beginning, right? When the company first IPO'd via direct listing in April 2018. At that time, there was a lot of excitement about this company, the potential, the growth prospects, but there was this overhang when it came to the business model. Can this be a profitable business? Now, more than 4 years later, we're still trying to answer that same question, and investors and analysts, they're sort of getting tired of this growth at all cost strategy that Spotify seems to be implementing. So I spoke with CFRA analyst John Freeman, and he told me that Spotify is a company that's not oriented towards profitability, and that at the end of the day, their margin disappointment is not short-term pain like CEO Daniel Ek has been stressing, but rather it's structural, and that's a problem. He suggested that potentially Spotify needs to explore new management, that there could be elements to this business that Ek just doesn't understand. And by the way, as of December 31st, 2021, Ek owns 16% of Spotify's outstanding shares, maintained 31.9% of voting power. So he has a lot to say in this business. And if you take a look at their operating expenses, that growth was 65% year over year. And it's from things that Spotify can really control, right? Personnel. They're hiring at a time when a lot of tech companies are pulling back. They're acquiring companies. And it's this sort of sacrificing profitability for the sake of subscribers, no matter what the cost is. And that's not really going to fly on Wall Street too much longer.
If the short term is just so challenged because of their own spending, what does the long term mean for this business?
Yeah, and long term, analysts on Wall Street, they're pretty optimistic that Spotify will be able to eventually hit those 30 to 35% margins, but I'm talking long term, like 2027 and beyond. There's a lot of optimism around potential price increases. JP Morgan estimated that if Spotify does raise its premium plan to $10.99, that could add incremental revenue of 200 million euro, which is significant. But again, we're back to this narrative of potential, and not really any tangible action. And I want to read this quote from Daniel Ek on the earnings call. He said, "Top line growth in the platform is a leading indicator for future success on all other financial metrics." And that's a pretty bold statement, right? Just focus on our revenue. Don't worry about our earnings. That sort of goes to show where his focus is right now for the company. And with this macroeconomic environment, if you weren't making money in 2019 when things were much better, how do you expect to make money moving forward? So there needs to be a lot of changes. They need to pull back on spending. So a lot of questions for this company moving forward.